Hello everybody and welcome back. In this video I want to talk about all the companies that report earnings this week and all the companies that I am monitoring, because I'm a shareholder of some of the companies that are reporting earnings. As you can see from this Twitter post, you have a lot of companies, a lot of important companies that report earnings. I am monitoring with a lot of due diligence some of them. Okay, so there are some companies that I don't really mention on my YouTube channel, but I'm following them. And actually, it will be a very important week for my own portfolio. You know, my portfolio is public on eToro. You can see what I own every hour of the day. And you have a lot of companies that report earnings. And I'm a shareholder of this one. So I think we can just review day by day what is happening, all the KPIs that I'm monitoring, what is important, what is not important, and what really matters for all these companies. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year, investing in a concentrated way, a concentrated portfolio. So yeah, let's start with the first day. We have Monday. Actually, Monday is a calm day. Most probably I will release this video on Monday. And the first company to follow is Ryanair. Obviously, if you want to have some fun and see what is happening with Elon Musk, what are the odds that Elon Musk acquires Ryanair? Anyway, you can follow a few comments from the CEO of Ryanair. It will be quite funny, but apart from this, I'm not frankly monitoring all the airlines. I think this is a very poor business model. So when it comes to airlines, I'm not monitoring anything. You have some small banks that are reporting earnings. Actually, last week you had a couple of reports from banks. All of them indicated that we are not in a recession. The consumer is in a good shape. When it comes to big investment banks or small regional banks, okay, you have a few differences between big banks and small banks. The big banks are having trading fees, investment bankers fees, things related to the IPO when a company wants to become public. And for smaller regional banks, that's about doing loans and monitoring the quality of the loans. So far, both banking segments are in a good position and they don't say anything about the consumer being weak. So far, so good for the economy, the US economy as a whole. And then what do we have? We have Brown & Brown, the insurance company, Monday after close that I'm monitoring, but from a distance. It's a quality company after all, and something to monitor if you want to invest in a quality company with decent margins and a good quality management team, okay? Apart from this, frankly, on Monday, you have nothing. Small banks, some REITs that I don't want to have in my portfolio. Tuesday, it gets more interesting, frankly. You have UNH, United Healthcare. Obviously, this is a big conglomerate when it comes to healthcare insurance in the US. The stock got crushed, and maybe it's a value play. You have many super investors that bought the dip on United Healthcare. They expect to have a difficult period and then rebound sharply. And this is a company with a moat, so always good if you want to invest in some value plays to monitor what is happening with United Healthcare. I have some clients that are invested in this one, I understand.
By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video.
After this, UPS is a good indicator of whether we are in a recession or not. If you check the traffic, if you check the consumer sentiment, UPS and all the delivery companies are good indication whether the consumer is in a good shape or not. And it allows you actually to cross-read between industries. First, you have the banks. What is the quality of their loan? 2, you have the delivery. Are customers spending more? Same thing with Amazon, by the way. 3, you have chips. These are now good indicators of whether we will enter a recession or not. You can cross-read between these 3 sectors and see if we are going to enter a recession or not, if the consumer is in a good shape. Okay. After this, you have Packard. Yeah, that's about trucks. General Motors, some weapon companies. Nothing that I monitor a lot. You have Roper Technologies that I don't like. And after the bell on Tuesday, you have Texas Instruments that is famous for being a quality company focused on free cash flow per share. And actually, I would love to be a shareholder of Texas Instruments. I don't think I've talked about this company on my YouTube channel, but I would love to be a shareholder at some point. Okay. Apart from this, you have Logitech. That is also a good value play in my opinion. And apart from this, nothing. And now it gets interesting. I believe you clicked on this video for what is happening on Wednesday and Thursday. So on Wednesday, before the bell, you have the best European company maybe at the moment, ASML. So lithography, EUV, monopoly, and the stock was hated for some months, and now the stock is loved because the stock is going up. As always, the price is driving the sentiment. If the stock was down, people would say it's a bad business model that will get disrupted. Now the stock is up, so people are very happy. They are cheering ASML up. Fair enough, you want to see what is happening with their orders, with their guidance. Every time the guidance was changed, the stock price of ASML dropped a lot or moved up a lot. So maybe they will increase their guidance, maybe they will increase their prices. It's always good to monitor what is happening with ASML and if they announce some change in CapEx. Okay, these are the things I will monitor for ASML. Obviously, it's a very big, important part of the chip ecosystem. So, of course, I will monitor it. Of course. And then you have General Electric. I'm not following it, actually, from a distance. I know it's a quality play, but I'm not a fan. Starbucks, turnaround play. Otis, yeah, it's pretty good. You have MSCI. MSCI is a company I have in my portfolio. It's a company that I monitor deeply. One of my deepest deep dives I've ever done. And it is a company that I have in my portfolio for what? 11% of my portfolio? Maybe the third largest position in my portfolio. So of course I'm extremely positive when it comes to MSCI. I hope the best for them. And I'm a fan of their buyback program. So every time the stock reported earnings, MSCI moved a lot. Most of the time, it moved down a lot. MSCI dropped. And one thing that will be really important if you want to also monitor MSCI is their implementation of AI. In the last quarter, we had some extremely bullish comments from the CEO of MSCI saying that AI is a godsend to us. Let me repeat, AI is a godsend to us. This is a real actual quote from the management team. They expect the AI monetization to reaccelerate revenue, and they expect AI to reduce costs because they are no longer hiring. The employee count was up 2% year on year. So you have a business that can grow 10% per year, but the costs of employees going up 2% per year. So you have operating leverage and the margins are going up. Something you want to monitor are the margin profiles of the 4 key segments. You have the index segment for MSCI, like the benchmark. You have the analytics segment. You have the ESG segment, and you have the private assets segment. You want to see for the index, the biggest segment, the first one, you don't want to see margin improvement. I would love to see margin slow down, actually, a decrease in margin, but a reacceleration of revenue. This is maybe one of the most important things I would monitor for MSCI. And for the 3 other segments, you want decent revenue growth, but more margins, and more margins. Okay? So for index revenue, for the 3 other segments, you want margin improvement. Okay? I've made plenty of videos on this topic on my YouTube channel. I've been covering MSCI for a few quarters now, and I believe this is what the management is going to do. Okay? For the last quarter, they had this playbook. And for the 4 segments, they were fine. Only for the analytics segments, margins were expected to go up and margins went down. So that was bad. Now, big question is, will you have the results you expect? Will the margins for the analytics segment go up? You want this to go up. Apart from this, you want to check the buybacks. And that's basically it. You want revenue acceleration, more margins overall, and granularity for the 4 segments. Index, reacceleration of revenue, and for the 3 other segments, you want a margin improvement. Apart from this, you have a little bit of buybacks. but now the valuation is back to fair value. We are not cheap anymore. This is what I believe. So it's an extremely well-run business model with an exemplary management team at a fair value. This is why I'm a shareholder. So I don't expect anything much from this report. Another one is Danaher, famous serial acquirer that I'm following from a distance, but not really in depth. And Amphenol, which is a great quality company. Or obviously progressive. That is really important. And now after the bell, wow, this is huge. Wednesday will be a huge day. I will most likely make a video on MSCI. But I think I will make other videos on other companies this week. Because this is a huge day. Wednesday night, you have Microsoft, Meta, Tesla, IBM, Waste Management, Lam Research, ServiceNow, and United Rentals. You have big companies. For Microsoft, Meta, you obviously want to monitor the capex. For Meta, you want to check if they continue to grow their revenue at 20% per year. For Microsoft, you want to check the tracking of their price increases that are expected in 2026 and how they will implement a Copilot, etc. Maybe you want to know some comments about OpenAI and ChatGPT that is getting eaten alive right now by Gemini. In terms of market share, Gemini is winning, so that means ChatGPT is losing, but they are not dead. I mean, they can fight back, and people are calling ChatGPT dead too early, in my opinion. So maybe they will announce something big, maybe they will announce something better, maybe more price increases, maybe more capex. And for Meta, you want to check the capex and the revenue. Also on Meta, they just announced the beginning of monetization for Threads, their platform like Twitter. That's their Twitter equivalent, but for Meta platforms, called Threads. Nobody uses Threads, but in terms of users, you have hundreds of millions of people that are using Threads. I don't know anybody personally using Threads, but I have the app, so I'm checking there. I see the official stats, and yeah, I mean, officially, Threads is a platform that has more users than Twitter, than X, which is crazy. I know nobody that is using Threads, but maybe I'm the exception here. Anyway, this is an app that is for mobile, not for desktop. As you can see here, I'm using Twitter, but on my laptop, on my desktop. For Threads, they are not on desktop. Almost nobody uses Threads for desktop. Almost nobody. It's something for the smartphones. Which is great, actually. Which is great. So they will maybe explain how they plan to monetize Threads. And also they are continuing to ramp up monetization on Instagram, on Reels. I see more and more ads about this. And actually, I think they are cooking the numbers a little bit when it comes to Reels. And number of Reels that are the vertical videos, Reels being shown. When you open Instagram right now, you automatically go to Reels. In the past, when you opened Instagram, you went to your feed with the stories, with your messaging, etc. Now, automatically, when you open Instagram, it goes to Reels. So that's a view. I mean, it counts as one view. So more Reels are being seen because they are being shown to you automatically. It's as if you started YouTube, and instead of going to the homepage, it automatically starts a new video. So yeah, maybe they are cooking the numbers a little bit to juice the numbers a little bit. Okay, so I want to check number of users, number of Reels, obviously, the ad pricing, the ad volume, ramp up monetization of Threads, capex and revenue. That's it. Next one, you have Tesla. I'm not monitoring Tesla at all. I don't want to be a shareholder. IBM, not that much. Lam Research, I'm a shareholder. It's what? 5-6% of my portfolio. The stock is at an all-time high. It was the best, one of the top 10 best performing stocks of 2025, and I still love the company. I think the valuation is too high right now, so I've been trimming the position and rotating into software, by the way. I think Lam Research is in a very good shape, but the valuation is extremely high. So I would not be shocked to see a 10% decline in Lam Research. Maybe they will increase their guidance, but maybe because the valuation is so high, it will not be enough. My guess is the stock goes down, but I mean, I don't know. I don't know, you don't know, nobody knows if it will go up or go down. It's a guess after all, but I can be totally wrong and the stock can skyrocket to the moon. Anyway, I'm monitoring it. I think I will just let it run. Even if it goes down, that's okay. And even if it goes up, so be it. I will have more gains, but I will not trim, I think. And now you have one of the most important software companies, ServiceNow. Will they monetize AI the good way? There are plenty of conclusions that you can have from ServiceNow. If ServiceNow is monetizing AI and reaccelerating revenue, it will improve the overall sentiment for the whole software industry. If ServiceNow can show the world that AI is helping the business and the revenue is reaccelerating, you can get a huge re-rating for Salesforce, for Adobe, for plenty of other software companies that are getting killed right now. So very important. And if ServiceNow disappoints, you will have a bloodbath. This is what I'm monitoring. I will check what they say about AI monetization. This is the only thing that matters. The retention rate is very good. The margins are fine. Okay. After this, you have United Rentals. You want to check the rental equipment for AI. Whirlpool, I'm not a fan at all. Levi's, I'm not a fan at all. Thursday now. You have MasterCard that is reporting earnings. I'm a shareholder of MasterCard. It's maybe 10% of my portfolio, fourth largest position. And usually when MasterCard or Visa report earnings, you don't have to monitor what is happening. But now, in 2025, you have a new rule. You have some new laws that may be passed about swipe fees and about tapping the credit card interest at 10%. These are the two things to monitor. Apart from this, I expect the business to grow double digits. I expect them to do buybacks. I expect them to make a dividend payment. And that's it. Nothing else to monitor. After this, what do you have? Altria, no, I'm not monitoring it. I'm monitoring Tractor Supply, actually. Tractor Supply is a very good company. Tesco, very, very good company. And I want them to grow again. Maybe I will have to wait a little bit longer. Apart from this, nothing really interesting for my investment style. Another weapon company, I don't want to touch this. After the close, you have Apple. After the close, you have SAP. So SAP, same thing for ServiceNow. You want to check if they will monetize AI, how and why and how much. Okay. You have SanDisk. So that's chips. You want to monitor what is happening here. Visa, same thing that we had for MasterCard. You want to check only two things. The two laws that may be passed. Any comments on this topic? And then Dakers. Dakers right now is an extremely interesting value investing play. You have a company that is growing. You have two brands. You have the Hoka brand and the other one. No, you have a few brands actually for Dakers. They are growing. They are profitable. They are net cash. They are free cash flow generative. They are doing some good capital allocation moves. And the stock is cheap. In 2025, Dakers was one of the worst performers. And I think the stock is extremely cheap right now. So I could totally understand if people buy Dakers right now. If they announce something big, a new buyback program or reacceleration of growth, the stock will go up a lot. I think it's a very good quality company, but it's in the apparel equipment industry, which I don't like. So this is why I'm not invested in Dakers, but I could totally understand why people touch it. I will monitor it, but I don't think I want to touch it. Apart from this, frankly, nothing. AppFolio, no, I don't care about this. Friday, a lot of people monitor SoFi. I'm not. American Express, you want to check the cards, same thing. You have Brookfield Renewable Partners, so you want to check if the renewables part of Brookfield is doing well. Chevron, ExxonMobil, and that's basically it. All the things that I'm monitoring for this week. It will be a very, very interesting week. I may make a lot of money or lose a lot of money this week. A lot of things are moving and a lot of things to monitor. So I hope this new format was helpful to you in case you wanted some KPIs to track for all these companies. And I see you tomorrow.
If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.